Hello traders and welcome to our new webinar. It's Monday, January 20. It's 3 p.m. Central European time. So hope everyone is doing well, that you are ready for this very interesting, most likely very volatile week. Now let me know if you can hear my voice. Can you see my charts? Theo is here, Anas is here. Hello guys, how are you? So looks like that we are just a second. Okay, hope now it's better. Hey team, how are you? Yeah, thumbs up. So everyone who is here for the first time or new visitor, please make sure to subscribe to our channel, press a like, leave us a comment below this video section, be active in our chat box, ask questions for some markets. Maybe I will have time and look at them. But as you know, this is going to be a very interesting day. Trump will take office. We have a lot of crazy things going on, especially on crypto field. And right now we are just seeing US dollar breaking to the downside, breaking some key support levels that we have been tracking for a while now. So it looks like that this dollar turn could really take place, in my opinion. Now, before we go to some of the dollar and some FX charts, even I have some stocks ready as well. But as you know, markets are closed in the US today, but still I believe that update that I will show you a bit later on stocks will be relevant for the whole week. Someone is asking, what is the dollar yen monthly image? I think the dollar yen is in a very big consolidation. I will cover this in visiting new all-time highs. Okay, it's based on of this speculation, optimism around Trump. As you know, okay, we got some very bad connection, but hopefully now will be okay. So it was a lot of hype going on these cryptocurrencies. As you know, Trump meme coin was launched, Millennia meme coin was launched, and these are some really crazy stuff that's going on right now. And usually these kind of events usually occurs in very late stages of a higher degree trend. So that's something that you have to consider. There will be a lot of new inflows, a lot of hype going on, and usually when those investors that are not on crypto yet will be looking for investments right now when they're in very late stages of this game. So you really have to be careful up here and be aware of complete opposite directions on the markets. But before that, we still have some room left for these cryptocurrencies to reach higher prices. Looking at the crypto total market cap, we have seen some very nice and beautiful wave 4 pullback here, and now looks like that we are ready to see more upside here into this fifth wave. Okay, so I think that obviously these cryptocurrencies will stay in uptrend, and maybe alt season will still show up, because what we see here, just a second, here is that we have some very nice ongoing triangle consolidation. Okay, and looks like that this market is still waiting, that alt season can still show up. Maybe this will happen when we will see some very strong move to the upside on Bitcoin, and then suddenly we will see some profit taking, especially on Bitcoin, especially if there will be some very strong blow off moves. And then of course profits from Bitcoin could move to some of the altcoins, and that's when there could be a very interesting alt season. Maybe even that's when alt season will be gone and alts will move to new highs here out of this triangle consolidation. That's when we should be careful and to realize that maybe we're really in very late stages of this whole crypto cycle. But for now, we are still in a very good and healthy uptrend here. We also have here Nasdaq 100 risk on flows resumed last week, and maybe there is even room for further upside this week, which could help these cryptocurrencies to stay in uptrend. Now, if we look maybe also at some of the coins here, we have Solana. I received a few requests for Solana. Well, keep in mind that Solana is trading at new all-time highs, and now if you try to focus just on these subdivisions of an extended wave 3, where this structure should also contain 5 subwaves, well, in such case we are in very late stages now of this recovery. So you certainly do not want to look for any kind of new opportunities up here. If you were riding this trend for the last few months, maybe for the last year, 2 years, maybe it's time to consider to book some, okay, and be aware that there will be some new retracements. It's not necessarily that this will happen from here, but always do not be over invested up here. Always look to book something and maybe keep the rest or maybe small portion still on the market if maybe some very strong moves to the upside will show up. But overall, just keep in mind that there can be a new wave 4, even some wedge formation here is very possible. But if we go to the smaller time frame, even 5 subwaves up, which is our primary scenario in a wave 5, also should suggest that we are in very late stages here for this extended wave 3, and that you should be aware of this wave 4. So if you're not invested, fine, you just have to wait on a pullbacks. If this pullback occurs, then there will be new opportunities. Definitely, I do not see any kind of opportunities up here. Okay, it's very risky in my opinion. And always when market will pull back in a wave 4, this can take price back to the previous fourth wave, which obviously is around 130, maybe even 100 level could be very attractive. So that's for Solana. Now, earlier I mentioned this some crazy stuff that is going on. We have Trump coin, we have Millennia coin as well. We don't have obviously any kind of real data here, but you can see how how, I mean, that's really impressive move, but obviously there will be even more inflows at higher prices, and I'm afraid that this strong move to the upside at some point will be reversed, and there's a lot of risk here involved. So I would definitely avoid this one. Same thing with Millennia coin as well, which has been announced, I believe, yesterday. This one, I mean, also what I can't believe myself what's going on here. So I just hope that this will not shake the cryptocurrencies as a whole very aggressively, because we know what usually means with when we have this activities going on in this stage of the trends here. So you will have to be very careful. Now, if we take a look maybe on Bitcoin itself and try to focus on some higher targets, since we are moving into this fifth wave, keep in mind that we are now seeing prices trading in a wave 5 of 5. Okay, so more importantly, from August lows here, you are seeing this current lag in late stages. Okay, maybe that's not going to be the black wave 5 that will cause a very massive reversal. Maybe we will see just a temporary ABC correction, but still some correction should be expected since we are in a fifth wave. But where are the ideal targets for the fifth wave? Well, looking at the fib levels, also from the higher Elliott Wave pattern here, higher degree pattern, well, the ideal would be around 130 to 140,000. Okay, so if we see maybe some very strong move into that area with a spike and market reverse to the downside, I think that this will be the most important evidence for a potential completion of this cycle, and that's when there could be some very interesting new exchanges from Bitcoin into alt. Okay, and that's when maybe alt season still could show up. So Bitcoin, as I said, in a fifth wave, maybe this fifth wave itself will unfold in 5 subwaves here into our targets, as we mentioned. Looking at maybe some short-term levels, since we found the support at this very nice trend line and around 100,000 level, that's definitely, I would call it as a bull bear line. So as long as we are above that figure, it's all good. all looking great. If we break this one, then, and let's say that we fall from here and we break this level, then wave 4 will maybe become more complex, or maybe even we have a fifth wave here in place. But for now, it looks like that there is a very good chance that we will obviously continue higher. But again, from a trading perspective, not the best place to look for potential trades. Definitely not during this expected very volatile week. Now, looking at the Ethereum, as you know, there have been a lot of exchanges going on from different alts and coins into Ethereum. Everyone is waiting when this Ethereum will pump up, and for now that's still not happening, but we have seen some interesting liquidations not long back down here around 3000, that I called it as a very important strong support level. And so far we have a very nice interesting bounce, and just watch these levels around 3500. If we can break this level, then I think that there is a chance that this one will move to the upside. If suddenly, let's say that market will just stay here back in consolidation, then obviously just we will have to be very much more patient before this whole consolidation can be maybe finished. But overall, I just think that the higher degree trends still on the Ethereum shows a very beautiful picture where there is a lot of upside potential. But as you know, if we are in really late stages of this crypto bull run, if there will be still alt season, it doesn't mean that all of the altcoins will make some interesting, very strong performances. There will be some of the altcoins that will perform the others. Of course, there will be some that will make a very deep pullbacks, and there are even some that are already trading at all-time highs, like Ripple. And as you know, last week we discussed about Ripple. We said that this is most likely wave 4 consolidation. We were tracking a triangle, and so far we have a very nice move out of a triangle. Now, what's very important is that moves out of a triangle, okay, are final in a higher degree 5-wave sequence. So it means that moved out of a triangle will complete this 5-wave rise. And of course, there are much higher targets available here and possible, but keep in mind that we are already trading at all-time highs and coming out of a triangle. So new pullback, new reversal can show up anytime. Okay, so I'm basically tracking two interpretations. Now, the ideal would be that we will see much higher prices here into wave 5, let's say even towards $4 or even higher. But if these levels around 3.60, okay, will hold as a resistance in this fib zone, then there is even a chance, if I adjust the wave count a little bit, okay, that this is already now ongoing wave 5, okay, of 5, and you will see a reversal much earlier. So in either case, as you see, we are coming out of a triangle. So again, you will have to be very, very careful up here and not chasing the market, especially not, I do not suggest risking, taking a risk here, because it's, in my opinion, very, very late to this trend here. Okay, now let's go to some of the FX markets. So here is US dollar. Just again a brief recap of what I have been telling already back in November, that we could be running into some and seeing some very nice strength of the US dollar going into the end of 2024, start of 2025, but then when Trump will take office, we will see a reversal of trend. And this happened back in 2017, so I'm following the very similar map, not because that happened in 2017, that's just additional analysis to this Elliott Wave context, which shows that we have 5 waves down and 3-wave retracement here. So I think it's potential that market will reverse here. There will be volatile moves. What I'm seeing right now is actually, I don't know why this one is not updated here. What we are seeing right now is that we have some very nice, interesting wedge formation, which obviously should send price to the downside. I'm not sure why this is not updated here. What's happening with my quotes right now here? Anyway, we will check euro dollar a bit later, because obviously it mirrors the picture. So the idea is that dollar will turn to the downside, that we are trading at the resistance, and as I said last time, it will be much easier obviously to see US dollar coming to the downside if we will have treasuries completing the downtrend. Well, with touched here these lows going back to October of 2023, looking at this daily continuation chart, which has adjustment contract changes. It means there are no gaps between contracts. So that's why I think that this one is much more appropriate chart to look for. And we reversed and erased all of those gains here, and now we are trying to stabilize. What's the most important? If you look at smaller time frame, this looks like an impulse from the lows. So it looks like that US yields, even if just temporary, could be headed to the downside. As you know, Trump administration, they probably want to have weaker US dollar because of the US export, and obviously Trump has announced and said plenty of times that the rates are too high. Okay, so we'll see if there will be any kind of a new discussion about these topics, because in such case, of course, US dollar could see a very strong reversal to the downside. Now, what's also important for dollar yen that I will focus right now are US yields as well. As you know, last week I discussed and mentioned that US yields were very high, okay, while dollar yen actually reversed, just spiked to the upside. I think this happened after the latest jobs data that was reported from the US this month for December. So back then I thought that maybe, yes, dollar yen is really headed into potential reversal zone, especially because I also saw that maybe dollar itself and US treasuries are moving into some very interesting levels and will complete the higher degree trends. So now when the US yields turn to the downside in this impulsive fashion, well, of course, dollar yen could stay also weak. And we also have BOG week. It will be a rate decision, I believe, on Thursday, if I'm not mistaken. And as you know, sooner or later they could again return to this and be back with their hawkish views, and this obviously could support Japanese yen, and in such case we could see a very strong reversal to the downside. And obviously this looks like a very nice 5-wave drop, so after a correction I think that there is a chance for further weakness while the market is trading below 159. And someone asked earlier for the higher degree picture here. Well, I'm looking here at that's daily time frame. I actually would not be surprised if we are trapped in a very big consolidation here. Okay, but since we had a very strong drop here, I assume that's a wave wave A, as part of an ABC correction, which can even be a flat. Okay, but I think that that this market could still experience some weakness, even if just short term right now. I think that there is room for even maybe for 152, 151 for the start of this year, especially if the dollar would really remain bearish. Now looking at euro dollar, as I said already last time, we are tracking final stages of this 5-wave drop for a wave C right into the 61.8%. Everyone was so extremely bearish on the euro down here based on COT data that I also showed you in some of the past webinars. And so far, what's happening? Well, we are seeing this dollar trend reversing, also because of Trump. Also, there can be maybe the ECB that will stop dovish views, because as you know, they have been very dovish for a long time in 2024, while Fed has changed their views. But now maybe ECB will try to follow the same steps, and if that would be the case, obviously this could mean that the euro dollar could bounce back. And so far what I'm seeing here, especially maybe that's even more important on a 4-hour time frame, is that we are seeing prices moving out, trying to break out of this wedge formation. Now, what I would be careful here, still, because it's Monday. You know how I always mention about Mondays. The Monday flows can be reversed on Tuesday or by Wednesday, especially when you have Monday flows very sharp. Okay, so I'm not saying that that's going to be the case right now, but if you are long euro dollar and maybe you trade aggressively with some intraday setups and you are in profits now, maybe just be aware that there can be some new pullbacks. So it's maybe not bad idea to be aggressive on stops here, because overall, of course, I think that there is a lot of room for much more upside here, especially on this very important day. But overall, because of these Tuesday reversals potential patterns, I just think that it's very good to be aware of this and still make profit, even if market will suddenly reverse. But overall, this looks like a wedge formation, as I said, an ending diagonal here on a 4-hour time frame, which in my opinion can send the markets much higher when we finally, let's say that we cross 104.38 and we see a daily close above this level. Then I think that euro dollar could really be on the stage of much higher prices here. Looking at Aussie, we are seeing some very nice impulsive drop, but this drop maybe could come to an end, because what we are seeing right now is very nice reversal from new lows. We are breaking this channel. I'm not sure if this will only be just another wave 4, but think that 6,300 is a very important level here. As I mentioned earlier this morning, when the price for our members, when the price was down here, that we are looking for minimum upside objection here for 6,300, because even if that's wave 4 and the ABC rally was pointing into this zone, but if we can break this one and maybe see a daily close well above it, then I'm sure that much more upside potential could be in the cards. But the higher degree trend will change only if we cross this bullish level here. Why mark this as a bullish level? Because if I think that that's a wave 4, then wave 4 should not trade in the territory of this wave 2 if we consider the alternate scenarios here. Okay, but overall, I just think that commodity currencies which have experienced strong weakness in 2024 can be reversed in this year. Currencies in general and currency markets will always be changing in directions, especially when it comes to some very big swings. They won't be just a one directional moves to the upside like on stocks. There will be very big swings because of central banks and their policies, and of course they are all looking for similar to trying to stabilize their own currencies, and that's why I don't believe that Australian dollar will stay weak here. I still think that there will be a massive reversal at some point to the upside. Looking at dollar Mexican peso, as you know, I've been looking for this wedge pattern, for this potential ending diagonal. Could be in very late stages of this wave C. Not sure if that's going to be wave A of some kind of a potential flat formation or something where wave A can be corrective, or maybe is this all from wave B higher degree trend here or recovery. But overall, what's really important right now is just focus on this pattern. Okay, so that's a wedge formation. You have here this price that is slowing down. It looks like it's much slower compared to the previous trends here. You just can simply just draw some lines here, and you can compare these lines with the current one, and you will see that obviously this one has a much more different angle here. So this tells me that bulls are a bit tired and that we could see a reversal. And if we go back and maybe try to remember what happened here in 2017 when also Trump took office, very strong move to the upside based on tariffs, based on border with Mexico. As you know, we have seen a very strong move to the upside and then a massive reversal. So maybe now will be something similar, who knows, but the Elliott Wave patterns in general suggest that there can be a massive reversal still coming here. Now let's take a look on on the S&P 500. So last time I said that the very important level is this one here going back to November of 2024 when Trump won the US election. So back then, of course, there were a lot of new inflows, and that's why I think that this level is very important for potential stops. We came very close to this level and now rebounded. Now, what's the best appropriate scenarios to count this whole picture here? It is that this was a correction and that we will resume higher. However, since we can count 5 waves up here out of this corrective channel, I think that it's good to be aware of these pullbacks. So even if we are going to see more upside and continuation of this trend, I still think that this pullback can show up. So if we will see this resistance that will cause a limited upside in this range here around 6,100, I just think that then be aware of an ABC retracement. And if you will see only ABC pullback and not an impulsive decline, then of course you could be looking for potential opportunities here. Don't chase the markets up here, because I think that this is pretty strong resistance. You definitely want to buy the dip if you want to be involved on the long side. As an alternate scenario here, to be a bit more aggressive with potential wave counts, if something dramatic changes here or happens, is that this is the potential flat formation, and again that's then going to be a very strong resistance. So even this wave count suggests that we could be then moving into resistance. So if you're looking to buy markets here, I suggest to be patient, watch out for these pullbacks, and then trying to buy the dip. Don't chase up here. Now, we had a few requests for German DAX in the past webinars. So here is this one. It's in a very strong recovery, but what I see is a potential price that could be looking to slow down at the upper side of this Elliott Wave channel. That's one thing. And the second thing is that I'm measuring and comparing these lags, okay, of recovery since 2022. You can see that we had a very similar length in each of these lags of these uptrends. And now if you focus also on this recovery, how long they last, well, this one 157 days, this one slightly longer, but it was let's say here 195 days. So of course I would keep an eye on a very similar dates here, and let's see if the market could really be maybe in late stages. Of course there can be some blow-offs moves if we can break this line and see if some throwovers, but overall I just think that it's a very very late here in this game, and you certainly want to and be aware of some retracement, even if just short term. Now, looking at crude oil, as you know, last time I said that we have potentially 5 waves up, moving into some very strong resistance. But as I said, for confirmation of a bearish trend, you want to see a price that will drop back below 74.44. Why? Because an alternate scenario shows that this could be wave 1, and you are basically now maybe in some kind of a wave 4 here. So as long as we are above that level, there's still too soon to say that this trend is coming to an end. But if we can break this level, then of course I just think that more weakness will be seen. Trump administration, they want to have lower energy prices because they understand that this can be good and supportive for economy, and of course inflation in such case could come to the downside. But one of the reasons why we are seeing this is because of the release of hostages between Hamas and Israel. So that's why we are seeing this kind of a reversal, and it's very interesting what's happening right now when administration is changing in the US. So that's for crude oil. Now looking at gold, gold is a bit sideways here. I'm still not really convinced about continuation higher from here. I just think that it's premature to call the breakout. Keep in mind that we are basically still seeing just a slow recovery, especially in this last leg, which can be a wave C of this free wave movement. As I said earlier, you can help yourself to identify the potential impulse or let's say a continuation or late stages of a corrections by drawing a simple trend lines or lines. So you can see that this one was a very sharp here in the first leg, while this one is definitely not having the same degree of a strength here. So again, it looks like that bulls are, even if they are still here, they are losing strength. And you have even some very interesting overlaps here within this potential wedge formation. So I think that that's going to be a very strong resistance. Not sure if that will cause only a temporary retracement from here, but overall I would not be buying this market up here. I just still realize that when I look at the daily time frame, okay, that we can be in the middle of this black wave 4. Okay, if that was wave 2, look how long wave 2 was and even deep in price. So maybe rule of alternation could allow us to count this, maybe even be a triangle, but still in the middle of a triangle. Okay, so overall I just don't think that this wave 4 has finished here. Maybe some alternation suggests that we had very small wave E and we will see a straight move to the upside. But again, if you look at this wave count here, then on a 4-hour time frame, and let's say that that was a very small wave E, you would still expect wave 2 retracement at some point. Okay, and I think that then the first leg here, this wedge, could be actually a leading diagonal rather than ending diagonal, as I showed you on this first wave count. So even this one, which is the bullish wave count, suggests that we should or can expect some retracement. So key support for this bullish trend to continue after the next dip would be around 2,660. Okay, now let's take a look on silver. This one, you can see that it's not looking bullish at all to me. It's much weaker compared to gold. And again, another indication why I don't trust metals yet here. I just still think that there is a chance that market needs to liquidate much more longs before it may finally stabilize it. Maybe if this market will stay sideways here on silver prices around $30, between let's say 29 and 32, maybe even a triangle is a possibility here. The resistance maybe in the near term on the upside would be around 31 to 31.50. For a flat, obviously the 30 to 30 level, which is the swing high from mid of December. Looking now, just checking my list here. Now looking at stocks, here is Nvidia. As you know, there is a chance that this can actually be an ending diagonal and that we could see a very strong massive reversal to the downside, but there is a chance that this is still actually a wave 4 as long as we are above 115 level. So keep an eye very close on this level for the potential trend in change. For supports, 126, definitely very interesting levels, but I would assume that this market will be much higher based on cryptocurrencies, but for now it's not happening. Looking at MicroStrategy, this one is looking much better in my opinion. We have seen this retracement fill this gap that I have been covering a few times in the past, and now we are moving away from it, so we can assume that if cryptos will really trade higher and remain strong by tomorrow, I think that maybe MicroStrategy as well will continue higher into a fifth wave. Looking at PayPal, I talked about this one as well a few weeks back. We said that I'm expecting wave 4 correction. It retraced very nicely to between 38 and 23.6%. It was wave 4, and now I think that there is still 100 targets possible here, or maybe even slightly higher if we look back to 2022 when we had this potential resistance around 103. So up there, I think that you should be aware of potential new slowdown, because this 5-wave rise will then be in very late stages. Now looking at Tesla, as you know, we had some positive news because Elon Musk has met with Vice President of China yesterday, and obviously this could have some very interesting positive impact on Tesla. We have also seen a very strong move to the upside on Chinese shares and equity markets as well. So I would not be surprised if Tesla will resume to the upside. We definitely had only 3-wave retracement from the highs. We're trying to break out this corrective channel, so maybe the 5th wave will show up this week. But when we will finally meet new all-time highs here, I will be able to count 5 waves up out of a triangle. So that's when you should be aware of potential new reversal and a deeper correction. What I have here, where is this? AMD. Okay, here it is. I think someone asked in our chat room earlier, I think I noticed, for AMD, advanced micro devices, if it's good to buy. I mean, based on price, we had definitely very interesting pullback, but based on the Elliott Wave pattern, well, I don't think it's a completed correction yet. I think that there is actually room for further weakness. Ideal support would be around 100 here, where you also have this $93. Support slightly lower. It dates back to October of 2023. And ideally, if we meet these levels, it should happen with 5 subwaves within wave C, possibly even with some kind of a wedge formation. So hold this support could be quite attractive and interesting for potential new bounce. So for now, I think that this downtrend could resume, and I will maybe revisit this this price chart in a few weeks. Maybe we'll have to wait a few months. And finally, I think I had here Amazon. So Amazon is looking pretty nice here, could continue to the upside. We have higher highs, higher swing lows, clearly an uptrend, especially now when we are still holding above this trend line. We meet some fib levels, but because the pullback here from the highs is not looking impulsive, it's only in 3 waves, and we came also back to the previous swing highs of this wave 3. Very nice support. Also some small gap happened here back in at the start of December, and now looks like that we could see a continuation higher into a 5th wave, into the final stages of this higher degree impulse. Okay, traders, that was your webinar for this week. I hope that you enjoyed the content. Please make sure to subscribe to our channel, press a like, leave me a comment if you will watch this recording later. If you're interested in more of these analyses, especially on some of the intraday charts and analyses that we share and do for our members on a daily basis, make sure to check wavetraders.com for more informations, and of course our premium services. So hope to see you there. If not, I will be posting some of the updates on our Twitter channel as well. And of course, we'll maybe do some new free video updates in the next few days, especially if things will be very, very volatile. Traders, good luck today and talk to you soon.